Well, being an investment banker, one of my, what I do daily is to help my clients raise money. We help structure projects that are bankable. And in some cases, we can attract some of our own funds and also mobilize, debt capital into projects. Water is a sector that has been, very difficult. We've seen a number of water projects, but I must say that in Africa, we haven't worked on any ones that have yet closed. We're working on one or two right now, and we're hoping they'll close, but it does take time to do these projects. That's why, if one looks at what's happened globally, in particular Latin America, where during the 90s and 2000s, you had quite a number of projects that were done successfully, and also places like China, where they've done quite a number of water projects in Europe, particularly in the UK. In the 90s and 80s, they had a privatization model where they privatized the water sector with very strong regulation in place. So if a developer, if a client came up to me and said, I'm looking to do a water project, there are a number of home truths that one needs to share with them. And a bit like what Andrew did earlier on, he had a 7-point agenda. I have an 11-point agenda where, I sit them down and say to them, look, water, first of all, water is a very difficult sector because people consider it to be a social good and nobody feels they should be paying for water. But you have to make them realize that they need to pay for treated water. And for that reason, it's very difficult socially for politicians to drive those projects through. And even after agreeing to sign these contracts, they often get either renegotiated or cancelled. So there were a number of cases in places like Argentina and Mexico, etc., where concessions were cancelled after about 2 or 3 years. Usually around when a change of government happens and a new politician comes in trying to make an impact. So very difficult projects. Secondly, you need strong regulation. Typically, it's very difficult to find a completely independent regulator. In my own experience of working in different places, you'll find that, where a regulator says there is a certain investment requirement from government in order for government to meet their own side of the obligations. In imposing those recommendations for investment, if government is going through a difficult period, they try and influence the regulator to change their decision. And where you have very strong regulators, I've also find that they probably don't last very long. It's something the economists call regulatory capture. So you could be captured either by the government or in some cases the regulator is captured by the private sector because they institute litigation to try and change some of the terms. Anyone who's negotiated privately financed contracts will be aware that until you get to the last bidder, your bidders are fairly flexible about what they agree to. But once you're down to your final bidder and you're down to one, they try and change things that they agreed to previously. And so that often leads to many difficulties with many of these projects. On the water side, most of the contracts that have been done have been management contracts as well as concessions. The French have quite a history of doing what they call the Alpha-Marge type concessions, and you have the big water companies like Veolia, etc., who have managed to make a success of these water concessions, particularly in Africa. You'll see most of the examples in the Francophone-speaking countries. So, there again, it's a form of management contract. You can't completely hands off. Government still has to play a role in making these contracts work. And often with water, you find when the private sector is doing the due diligence, particularly when a water utility is being privatized, many of the assets are underground, so they can't see what they're buying. And you often find the cases that after they've taken over, they realize that the investment requirements are much higher than they'd originally anticipated. Obviously, that causes problems for financiers where you've done your numbers on the basis of certain assumptions and projections. And again, you've seen concessions being abandoned because the concessionaire then realized that what they had taken on was far more than they could chew. Pricing has to be seen to be equitable. We've seen in certain instances where, particularly in satisfying the lower socioeconomic groups, government wants to keep the tariff at a certain level. But then, one way is where you have industrial customers, there's some cross-subsidy that can happen to subsidize the lower socioeconomic groups. But having said that, it shouldn't be too punitive. And obviously, there are different tariff models, but you need to have it needs to be equitable. If you look at places like Nigeria where there's a significant amount of self-provision, either through boreholes, people having their own supplies, or actually buying water through tankers, you find that the willingness to pay is actually there, it's significant. But people want to see that they're getting value. And where there are tariff increases, they want to understand that it's value for money. There's the other point about the macroeconomic shocks that can happen. Particularly, you find for many of these concessions where you're charging in local currency, but a lot of the financing is in foreign currency. A lot of long-term financing cannot be secured in many of these frontier economies. You find that when there's a sudden shock or devaluation in the system, these contracts often have to be renegotiated because you can't pass on the full tariff increase to the consumer. It's a very sensitive sector. So again, we saw when the Asian crisis happened that some concessions were cancelled as a result of that, and the same thing happened in places like Brazil, Mexico, in the 90s. There have been cases of abandoned concessions, again, alluding to the point I made earlier about where either the government wasn't clear about their requirements when they signed the concession, or because these contracts are so complex that you find that the people who negotiated the contracts are not the same people who have to operate it. And often on the government side, you find that many of these, the government officials move around. So you're not getting continuity. And that can lead to problems when a new government comes in particular. And that leads to the issue of sanctity of contract. In a number of countries, you've seen contracts where government has certain obligations, and unfortunately, we see that quite a lot in Africa, where it's all right, the usual mantra in PPPs that risk should be allocated to the party that's best able to manage it. Well, you think government will be best able to manage, certain responsibilities, and you often find that government does not fulfill its own part of the bargain. So how do you manage that as a private sector developer? That's not only limited to water. It's something you see in other sectors, but particularly in the water sector, it's something that occurs quite frequently. It could be in the areas of water quality, how you guarantee certain levels of quality. And you often find that it's not just government, even the private sector may not always fulfill those obligations. There are also staffing issues. I mean, it's particularly public utilities, and water is a big area where you get the ghost worker phenomenon, where in government, and they're using it as a social service, and you have far more people employed than you need. So when a new private sector provider comes in, they find they often have to do some right sizing, as they call it. That could be very political. So all in all, it's not a sector that is easy to get into, but it's essential. So I think there are certain areas where private sector can come in, but if you look at, in terms of low-hanging fruit for private sector participation, it often tends to be telecoms, then you have the power sector, then transportation, and water comes, in terms of private sector participation, fairly low on that list. But it's an essential service, and government needs to play quite a significant role in acting as a catalyst for further private sector investment. I hope that's been useful. Thank you.
Doing business in Africa. You can't afford to be without Africa Investor.